Yo, what's up guys? It's your boy Looney. Today we're breaking down something that could seriously shake the markets in 2025. And that is what happens if interest rates drop and how that affects your portfolio as well as mine. I'm gonna have no complicated econ talk, just straight up strategy, examples, and real moves that I'm making. Now, I'm gonna first show you that you can see whether the Fed is going to cut interest rates or not. And you can do that on Robinhood. I'm not sure if you can do it on other brokerages, but you could do it here. You could first look at what they're gonna be and also if they're gonna cut or not. Now here, it's pricing in July that we will see no rate cuts. And then let's see if you could see how much rate cuts we will see in 2025. Here it's pricing in 2 or 1 or 0. Those are the most likely. And you can see some other prediction markets on here as well. But let's just look at the Fed decision. And let's go into what actually happens when interest rates go down, which is not getting priced in right here for July. When interest rates go down, borrowing gets cheaper, spending and investing usually goes up. So therefore, safe assets like cash become less attractive and riskier assets tend to pump. So again, probably won't see one in July. If anything, we will either see it in September, is what a lot of people are saying, or later this year, or maybe one early next year. But what actually will do well? One is tech stocks. So I have a few tech stocks myself, not actively investing, but something like Tesla will do very well. NVIDIA is another one. Let me pull up NVIDIA as well. I guess I can't search it on here, but NVIDIA is a great one, and Palantir is another one that is really good. So Palantir will probably do well, even though Palantir seems a little overextended and it just keeps going up. This is one of those stocks that I'm staying away from, not because I think it's a bad company. I just think it is insanely overbought and overvalued. And also speculative growth stock names should grow as well. My speculative one is Oscar. I know I talk about Oscar a lot, but it's a health industry one, and hopefully this one will do well. So we have another one like Shopify is another good one that could do well if interest rates go down. Another one is Affirm. Now, something many people don't really discuss on the investing side is that crypto will actually should do well during these interest rates decline because there's a lot of risk on, and a lot of the risky assets often rally really hard. And I'm positioned for that. So I have a lot of crypto. I have 9,000 in just simply crypto. So I have Bitcoin, Ethereum, Doge. Those are my main ones. And I have other ones that I'm also investing, but not big positions. And I have other crypto mining companies as well we'll get into. But crypto should do really well when interest rates go down because the risk on is a lot more tractable. So because lower interest rates mean future profits are worth more today, so valuations often expand. Now, if we don't see an interest rate cuts, I'm not too concerned because then I can get prices for cheaper. I'm just continuing to invest and build my position. So what's going to actually happen to my own personal portfolio and how can it affect mine? One we can look at is SoFi. So SoFi is one of my biggest plays. I have 400 shares, takes up around 20% of my portfolio. And this is a fintech, and it benefits from lower cost of capital, increased loan origination, demand, and potential margin expansion. So if rates drop, I do expect SoFi to trend up, especially if consumer spending picks up. And currently, I'm rolling my covered calls that are in the money so I can get some breathing room and actually have these shares appreciate, because that's the situation I have going on, is that I'm kind of capped at my gains. But SoFi is one that I can imagine that will do well. I don't think SoFi is the best time to invest. That doesn't mean it's a bad investment. Make sure you're allocating risk appropriate, maybe only doing 1 to 5% of your portfolio. At the time, mine was only like 1 to 5% of my portfolio, but now has grown so much, so now it is around 20%. Now, number 2, we're going to group together, and that is Riot and Mara. Very similar companies. They both are crypto mining companies, and these are just leverage plays. So if rates drop, risk on assets, sentiment returns, and like I said, Bitcoin and crypto usually pumps. So this gives Riot and Mara strong tailwinds. So we should see these ones pump as well. These ones take up a lot in my portfolio. This Riot taking up my biggest one, 25%. Again, rolling my cover calls. I do have a long-term buy call on this one and SoFi, so I have those ones for unlimited upside. And I have seen this before. I have seen when rate cuts, crypto rallies, and minor stocks often go vertical as well. We saw these ones actually increase a ton in the past 3 months. Riot up 112%, and Mara, I believe, not that far behind. Let me try and pull that one up as well. This one also up 51%. So doing very well in these past 3 months, especially when April lows. And right now I'm just holding them. I'm managing the cover calls. I'm not looking to put more capital in. That doesn't mean, again, it's not a bad investment, but I already did the investing back in April. And right now I'm just holding and just waiting for these things to play. And just crypto overall should have better returns if we do see interest rate cuts, because dollar weakens and then Bitcoin usually strengthens during that time. And we've seen Bitcoin run hard after pivots or just cuts. Same with Ethereum and altcoins, and that's why I'm just DCAing. I'm putting a little amount every day. Bitcoin, Doge, and Ethereum, I'm putting $3 a day. Not big, but they are just building long-term positions. I'm also having this cash being held, $7,500 in cash right now, and not because I think that we're going to see downturns, but I'm just prepared for some sort of downturn. And I already did a lot of my investing back in April, so I'm just stacking my profits and just cash for if we do see some sort of black swan event. The only position that I'm actively investing is Oscar, and I've been covering this one a lot in the past week, and this is just my only opportunity that I've been investing. I have about 5,000 in it, 5,000 cash collateral ready to be deployed if Oscar stays at these price levels or it drops a little bit and I get to buy them at a discount. So what are my final thoughts? In short, lower rates is actually really bullish for growth, tech, and crypto miners. Cash becomes less powerful. And if you're positioned right, this can actually be a massive upside opportunity. But timing does sort of matter. You don't want to FOMO into the tops. You don't want to be waiting for those interest rate cuts to start investing. And that's why you should be investing all the time, either now, and this is not financial advice, but at least this is what I'm doing. I'm constantly investing no matter what, no matter if the stock seems to be overbought or oversold. I'm looking for opportunities. If there isn't opportunities, that doesn't mean I'm not investing. That means I'm scaling back on investing. I have my buying power just sitting there, and if we do see more opportunities, I'll be more aggressive with deploying my cash somewhere. And just don't FOMO into the tops. You have to stay strategic, manage the risk, and just be ready when the market shifts. And if you're personally positioned for a Fed rate cut or just staying active, drop a like and comment with what you're watching. And if you want to see my trades in real time, you can check out the premium Discord link in the description. And also I offer the free one as well. Let's keep stacking. Peace.